Namaste. Welcome back to fourth session, reconciliation of cost and financial accounts. And today I'll be solving problem when only one profit, either cost profit or financial profit is given. So sometimes in few problems only one profit will be given, either cost profit or financial profit will be given. So when we take this as a base, how to prepare a reconciliation statement will be discussed in this session. I'm Dr. Uma B. Pujar, Assistant Professor of Commerce, Government First Grade College and PG Center, Dharwad. So this is the problem today, which I'm going to solve. This was asked in 2020 for 5 marks in Karnataka University, Dharwad question paper. So profit as per cost account is rupees 10,000. So you can see here only one profit is given. Profit as per financial account is not given. That we have to find out now. So profit as per cost account is 10,000. Interest debited in financial account rupees 500. Over absorption of overhead in cost account 4,400. Preliminary expenses written off rupees 650. Undervaluation of opening stock in cost account rupees 750. Overvaluation of closing stock in cost account rupees 1,250. So first of all, what you have to do is you have to identify those items which you are going to add to the list, and what are the items which we have to deduct. So when we take profit as per cost account, as I said earlier, I have shown you the format also. So what all the things to be added and what all the items to be deducted, I have shown you. So you should be thorough with those points. So let us see interest debited in financial account. So it is debited. As I said earlier, all expenses, all losses, and all items which are debited in financial accounts will be deducted from this format when we take cost profit as base. So interest debited in financial account will be deducted. Over absorption of overhead in cost account. So over absorption of cost overhead in cost account will be added to this format. Preliminary expenses, again it is an expense, we have to deduct it. Undervaluation of opening stock in cost. So undervaluation of opening stock means it will be deducted. If it is overvaluation of opening stock, it would have been added there, but now it's given as undervaluation of opening stock in cost, which is to be deducted. And overvaluation of closing stock in cost account, again this thing will be deducted from the format. So here you can see only one item, over absorption of overhead in cost 4,400 will be added, and other items will be deducted from this cost profit to arrive at the profit of financial account. So let us see the hint here. This is the hint which I have given here. Profit as per cost account is 10,000. So 500 will be deducted. 4,400 over absorption of overhead in cost will be added, and other items will be deducted. So you should be very thorough with these points. So which are the things to be added and which are the things to be deducted. So if suppose if one point will go up and down, the whole format will be spoiled and the financial profit will be wrong. So be careful while selecting these items. When we prepare, so this statement looks like this. So our profit as per cost account is 10,000. Add over absorption of overhead in cost, only one item will be added here, that is it comes to 14,400, and other items, that is interest debited, preliminary expenses, undervaluation of opening stock, overvaluation of closing stock. When we deduct these four items from this 14,400, it comes to 11,250, which is the profit as per financial accounts. So this is how you calculate or you prepare reconciliation statement. For 5 marks, only 5 to 6 points will be given You have to properly identify the things to be added and the things to be deducted and arrive at the profit. Let us see one more problem here. This is from 2006 question paper, Karnataka University, Dharwad, which was asked for 15 marks. Prepare a statement of reconciliation from the following data. Net profit as per cost account. Again, they have given net profit as per cost accounts, that is rupees 3 lakh. Works overhead charge in cost accounts 51,000. Works overhead charge in financial accounts 42,000. So students, just have a look at these 2 points. Works overhead charged in cost account, it is 51,000. Works overhead charged in financial accounts, it is 42,000. So both the overhead charges are being given in this problem. Now what you have to do is you have to compare. So in which books it is overcharged. So if the overhead is overcharged, that is overvalued in cost account, then you have to add. If it is overcharged in financial account, you have to deduct it. But in this problem, 51,000 is from cost books, 42,000 is from financial books. So the difference amount, it is overvalued in cost accounts. Any item, any overhead which is over recovered, overvalued in cost accounts should be added to the format. So we have to take out the difference of these two amount, and the overvalued amount will be added to the format. And the next point is income tax provided in financial books 90,000. Value of closing stock in cost account 28,125. Value of closing stock in financial accounts 31,125. Again, you can see here these two items: value of closing stock in cost account, value of closing stock in financial account. Value of closing stock in cost account, if it is undervalued, it should be added. So again, in cost account, it is undervalued. Undervaluation of closing stock in cost books will be added. So the difference amount, you can see here, this is more and this is less. So it is undervalued in cost. So whatever difference amount will come here, that item will be added to the format. Next is provision for doubtful debts 30,000. Dividend on investment not included in cost 6,000. Preliminary expenses written off in financial accounts 13,500. Stores adjustment credited in financial books 1,500. Share transfer fees credited in financial books rupees 6,000. Depreciation as per cost account 10,000. Depreciation as per financial books 17,500. Again, there are two items here in both the cost of depreciation is given from both the books. Again, we have to compare here. If it is overvalued in cost account, the difference amount will be added. If it is overvalued in financial accounts, it will be deducted from the format. The difference amount, that is 7,500. When we take out the difference, 7,500 is overvalued in financial books, that will be deducted in the format. We'll solve it and see. Next, loss on sale of assets shown in financial accounts rupees 12,000. Loss and expenses and charges will be deducted in this format when we take cost profit as base. So this is the problem given, and let us see the hint now. So you should be thorough with this format. When you just you can by heart it, or you have to just be thorough with this format. What are the things to be added, what are the things to be deducted? So when you are thorough with this format, you can easily identify what from these items which are to be added and which are to be deducted. So let us see here. Works overhead charge in cost account, as I said, it is overcharged in cost account. The difference amount is 9,000. It should be added to the format. Income tax provided in financial accounts 9,000. Income tax, it is a charge or it is an expense, we have to deduct it. Value of closing stock in cost, value of closing stock in financial accounts, it is undervalued in cost account rupees 3,000. Undervalued, it should be added to the format. Again, provision for doubtful debt, it is an expense, 30,000 should be deducted. Dividend on investment not included in cost. Dividend on investment, it is an income, so it should be added. Preliminary expenses, it is an expenses, it should be deducted. Stores adjustment credited. Credited means it is a gain, it is an income, we should add it to the format. Share transfer fees credited. Credited means again it is an income, it should be added. Depreciation as per cost books, depreciation as per financial books, it is overvalued in financial books. If it is overvalued in financial book, it should be deducted. The difference amount will be deducted in this format. And finally, loss on sale of assets shown in financial books rupees 12,000. So loss and expenses, as I said earlier, loss, expenses, charges will be deducted. It is a loss, so you have to deduct it. So this is the hint which I'm giving you to solve this problem. So when we add and deduct this from this cost profit, let us see how the format looks like. Let us solve now. Okay students, let us solve this problem now. So this is reconciliation statement, particulars and amount. So let us take base. What is given in the problem is net profit as per cost account. Net profit as per cost account. So what is the amount? Rupees 3 lakh. So for this we have to add. What are the items? As I have discussed, works overhead overcharged in cost accounts. So this is the difference. Works overhead over recovered in cost account. Works overhead over recovered in cost account. So the difference amount should be taken here. So what is that difference? That is 51,000 minus 42,000. So the difference will be 9,000. So take it in inner column, rupees 9,000. And the next item is income tax provided. We should deduct it as I have told you. And the next point is undervaluation of closing stock in cost. Undervaluation of closing stock in cost account. So what is the amount given? Again we have to see the difference here. 31,125 minus 28,125. So take out the difference. The difference will be rupees 3,000. So these are the items which we have to add. Next is dividend on investment. Dividend on investment. Amount given is 6,000. And next point is stores adjustment credited in financial books. Stores adjustment credited in financial accounts. That is amount given 1,500. The next point is share transfer fees credited in financial account. Share transfer fees credited in financial account. Amount given is rupees 6,000. So these are the 5 items which I had shown you in the hints which are to be added. When we total all this together, it comes to 25,500. So now we have to add these two. It comes to 3,25,500. So this is the total now. And for this we have to deduct few items. So let us see what are those. It's already discussed earlier. Now the very first point is income tax. Deduct all the expenses and losses. Income tax given amount is rupees 90,000. And the next point is provision for doubtful debts. Provision for doubtful debts. Amount given is 30,000. Okay. These are very easy problems. And next is preliminary expenses written off. Preliminary expenses written off. Written off, that is 13,500. Under recovery, depreciation under recovered. Depreciation under recovered in cost account. In cost account. So let us see the difference. Both the amount is being given here. One is 17,500 minus 10,000. So what will be the amount now? The amount will be 7,500. Difference amount will be taken here, 7,500. And finally, loss on sale of assets. Loss on sale of asset. So amount given is rupees 12,000. So these are the items which we had to deduct. When we take the total of these, it comes to 1,53,000. 1,53,000. So we'll add it now. We'll deduct from this to this. Let us see what will be the amount. So 3,25,500 minus 1,53,000 means it comes to 1,72,500. So this is the final answer. What is this now? This is profit as per financial account. So this is the thing how we solve. Hope you got it now. So when we say this, so it looks like this. This is the format. You can have a look at it and try to solve some more problems on this. I'll be telling you some other problems also, some other variety of problem I'll be solving in my next session. Now hope these 2-3 problems are very clear to you now. I'll be coming with other type of problems in my next session. Until then, have a nice time. Have a great day. Thank you very much.